Realty Income stock has continued to trade lower over the past year, and it recently hit a 52-week low after it was announced that Realty Income has agreed to acquire Spirit Realty Capital in a $9.3 billion stock deal. So in this video, we have a lot to go over. We're going to be taking a deep dive into the company, looking into the transaction overview of this most recent deal, and of course, jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Realty Income. So let's go ahead and jump into it. Now, Realty Income, currently trading at $50.07 per share, has a starting dividend yield currently sitting at 6.4%. We can see over the past year down around 19.5% and year to date down around 21.52%, and they did just recently trade right at their 52-week low, which is around $45.04, and their 52-week high was sitting at $68.85. Now, this company is known as the monthly dividend company. They pay out dividends every single month, and they've been increasing the amount they pay out in dividends for around 25 or 26 consecutive years. So when we look at this 10-year chart, we can see a steady history of increasing those dividend payments over time. Back in 2013, they were paying out around 18 cents per share every single month, and jump forward to now, it's now sitting at 26 cents per share every single month. So if we look at those dividend growth rates, it's somewhat decent for a real estate investment trust. We can see that 3-year dividend growth rate, 5-year, and the 10-year all sitting fairly close to around 4%. So that is decent dividend growth for a real estate investment trust that has a nice starting dividend yield. Now, whenever you're looking at dividends with a real estate investment trust, to judge the safety of those dividend payments, you actually don't want to look at the payout ratio. What you want to look at is the FFO and the AFFO payout ratio. And we can see the AFFO payout ratio right here, sitting around 76.54% for the forward-looking year, and for the trailing 12 months, again, around 76.84%. So it does currently look like those dividend payments are currently safe. Now, we need to jump into the big news that really pushed down the share price quite a bit over the past week, and that is Realty Income agreeing to acquire Spirit Realty Capital in a $9.3 billion stock deal. So let's go ahead and jump into some of the news on this transaction. We can actually see Realty Income laid out at investors' presentation for us to break this down a little bit more. So now the first thing we need to point out is the transaction structure, and we can see this is an all-stock acquisition by Realty Income, which is really important, and I'll break that down in just a second why, but we can see Spirit's shareholders are going to receive 0.762 of a share of Realty Income for each Spirit common share. The result of this transaction is Realty Income is expecting to increase their AFFO per share by around 2.5%, and the transaction is expected to close in Q1 of 2024. So the most important thing to understand about this transaction is, again, it is an all-stock acquisition. So keep in mind, when real estate investment trusts want to grow their portfolio, there's typically one of two things they can do. In the first place, they have to pay out 90% of all the profits to their shareholders in the form of dividends. So the first option they have to acquire new properties is typically to use debt financing. Now, the problem with that right now is interest rates are continuing to climb. We can see in around 2020, 2021, they're the lowest they had been in around 30 to 40 years. But with interest rates currently climbing all the way up to above 7%, the highest it's been in around 20 years, it looks like debt financing is not the best option right now. So the alternative for a lot of real estate investment trusts is to issue new shares. Now, there is problems when you issue new shares because it dilutes your current shareholder. So if we jump over to the financial statements, I'll click on balance sheet, and if we scroll down here, we can see total common shares outstanding right here. In 2013, you can see where it was at, and you can see where it was at in December of 2022. It's basically more than tripled over this time period. So the big problem a lot of people have with this stock is if you own it, you're currently being diluted at a pretty rapid pace, which is not something you want to see as a shareholder. So yes, this is somewhat common for real estate investment trusts, but it's really ramped up for Realty Income over the past couple of years. If we jump over to the fourth slide in the investor's presentation, we can see some basic facts on Realty Income. They currently have around a $54 billion enterprise value, and we can also see they currently own over 13,000 in commercial real estate properties. If we look at how their real estate portfolio is diversified, we can see a large portion is in non-discretionary, low price point, and or service-oriented retail. They also have a decent amount of their properties operating in the industrial industry. Now, if we compare Realty Income's portfolio to Spirit's, we can see Spirit currently owns around 2,064 properties with really high occupancy rates, obviously something we want to see, but they also have a large majority of their tenants in the service and retail sector and also the industrial sector. So if we scroll down and look at some of Spirit's primary tenants, we can see a lot of these are very comparable to the tenants in Realty Income's portfolio as well, such as FedEx, Dollar General, and even Lowe's. So while the stock's initial reaction to this deal was a pretty big drop in its share price, making it hit its 52-week low, we can see over the past few days, the share price has really jumped up over the past 5 days, up around 6.52%. Now, if you're a long-term dividend investor like me, the question we need to answer is Realty Income trading at a good price at $50.16? sense. So to answer that question, we need to jump into my REIT valuation spreadsheet and look at a few different valuation models to see if we can find its intrinsic value. And like always, if you'd like to be able to download the spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come up here and plug in the stock ticker O and hit enter, and you can see all of this data will automatically load in. So while the 500-day change chart for this company is obviously not pretty, it could present a buying opportunity. So let's go ahead and jump into our first valuation, and that is going to be the AFFO multiples valuation. And essentially what we're doing is we're looking at comparable REITs and seeing how the market is valuing them using a price to AFFO multiple. And the average for these comparable companies is sitting around 14.38. Now for Realty Income, the price to AFFO is currently sitting at 12.12. So when we plug this into our formula, we come to an intrinsic value of around $59.57, a decent bit higher than that current trading price. But something we need to understand about this valuation model is that the price to AFFO multiple for most real estate investment trusts has dropped by quite a bit over the past year. So Realty Income is no exception. Most REITs year to date are down by quite a bit, but Realty Income definitely down quite a bit more than most of these other real estate investment trusts. So if we jump back over to my REIT valuation spreadsheet, what we can do to make up for the fact that all of these companies have been dropping in share price is look at the historical price to FFO multiple. I think this is a really good way to value REITs long term because basically it allows us to see how the market has valued them over the past year. So what I've done is I plugged in the historical share price for Realty Income, plugged in the historical FFO per share over time, so we can see the historical price to FFO over the past decade, and we can see it charted out right here. So the average price to FFO over the last 10 years is around 18.7, but the current price to FFO is sitting at 12.33. So historically speaking, it does look like this REIT is quite undervalued compared to where it has been. Jumping over to our next valuation, one of my favorites is the dividend discount model. Now this valuation model values a company based on how much they pay out in dividends and how much that dividend is increasing over time. And keep in mind, this company pays out dividends every single month. And on a yearly basis, they've seen pretty decent dividend growth over the past few years. For a REIT, we saw 3%, 0.85%, 5.08%, and the most recent was around 3.23%. And we already looked at that FFO payout ratio. It seemed to be at a pretty acceptable rate for this REIT. So moving forward, I'm projecting a dividend growth rate of 3.5%, discount rate of 8%, and that actually gives us a dividend discount model price per share of $70.66. So when we jump over to the output tab, we can see the two valuations here that we used. Keep in mind the historical price to FFO valuation was not included on the output tab, but it does appear to be undervalued according to this valuation as well. But when we average these two valuations together, we come to an intrinsic value of around $65.10, around a 23% difference to the current trading price. So when we plug in a margin of safety of around 10%, it looks like our acceptable buy price sitting at around $58.59, and with a 20% margin of safety, our acceptable buy price around $52 a share. So although the market has reacted somewhat poorly to the most recent acquisition of Spirit Realty Capital, it would appear that the company is still trading at a good value. Now I completely understand why some investors aren't excited about the acquisition, especially due to the fact that they're going to have to dilute their shareholders by issuing new shares. But you have to understand, Realty Income is a pretty large real estate investment trust, and it's becoming more and more difficult for them to grow in an organic way. So while interest rates remain relatively high, moving forward, issuing new shares and diluting shareholders is probably one of the main ways that they'll seek out growth. But there you go, there's a quick analysis and update on Realty Income Corporation. Go ahead and let me know your thoughts on this company down below, and if you plan on buying or selling. Like always, if you'd like to be able to download the spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.